Fiscal policy is the direct mechanism a government uses to influence total demand in the economy. It does this through two specific actions: adjusting how much money it spends and altering how much it collects in taxation. This animated balance scale illustrates those core tools. You have government spending on one side and taxation on the other, balancing the total demand. A major trap in exams is confusing this with monetary policy. You must mentally cross out interest rates or the money supply when discussing fiscal policy. Those belong to the central bank, not the government's budget. This chart compares two different income levels to explain how specific taxes work. With a progressive tax, like an income tax, the highlighted tax segment takes up a much larger percentage of the bar as the total income rises. The wealthier you are, the higher the rate you pay. If the tax is regressive, like a general sales tax, the chart updates to show the exact opposite effect. The tax segment now takes a noticeably larger percentage of the smaller, low-income bar. Everyone pays the same flat tax at the store, meaning it eats up a bigger share of a poor person's budget. To secure full marks when defining these taxes, you must use the precise word proportion or percentage. Writing that a progressive tax takes a larger amount of money will not earn the mark, because a flat tax also takes a larger absolute amount from a higher earner. The mathematical distinction rests entirely on that proportion. Governments use expansionary fiscal policy to stimulate growth and create jobs. A common method to achieve this is implementing a cut in personal income taxes. Looking at this logical flowchart, we start with the tax cut node. Lowering income tax leaves consumers with higher disposable income. With more money in their pockets, they spend more in shops and businesses, which leads directly to our next node: increased total demand across the economy. As total demand rises, inventories empty out. This encourages firms to expand their production lines to keep up with the new spending, which requires them to hire additional workers. By connecting the initial tax cut all the way through to businesses hiring extra staff, we reach the final node. This policy specifically reduces cyclical unemployment, which is job loss caused by a lack of demand. Alternatively, the government could increase its own expenditure. Funneling money into education and training improves worker skills, while building new infrastructure attracts multinational companies. Both of these spending routes specifically tackle structural unemployment by making the workforce more employable. High-scoring analysis in a 6-mark question requires exactly this kind of unbroken logical chain. You must link the initial fiscal lever through the intermediate economic reactions directly to the specific type of unemployment being cured. This visual shows an actual 8-mark exam prompt. Discuss whether or not a decrease in government spending will reduce inflation. Pause the video here and formulate your own two-sided argument before we break it down. To build the why it might argument, we apply the core definition of fiscal policy. Government spending is a major component of total demand. Decreasing that spending directly pulls demand out of the economy.
We can see on this balance scale how a lower total demand weight relieves the upward pressure on prices. When fewer entities are competing for goods and services, prices stop rising so quickly, resulting in reduced demand pull inflation. However, evaluating the policy means exploring the counterargument. If the government achieves this cut by reducing supply-side spending, like eliminating business subsidies or halting infrastructure repairs, things violently shift the other way. Transporting goods becomes difficult and expensive, dropping a heavy new weight of higher production costs onto firms. To survive these higher production costs, businesses are forced to raise the prices of their products. The government's attempt to solve one problem has accidentally triggered a new one: cost-push inflation. Mastering 8-mark evaluation questions is about anticipating these exact traps. You demonstrate critical thinking by showing how a policy designed to cool the economy down can inadvertently make production more expensive. Let's apply that two-sided framework to a final scenario. Discuss whether or not an increase in the rate of income tax will successfully reduce inflation. The intended effect follows our established logic. Taking a larger proportion of wages reduces disposable income. Consumers spend less, total demand falls, and demand pull inflation decreases. But the counter-argument requires us to factor in human behavior. This diagram maps out what happens next. A higher income tax results in lower take-home pay.
Workers facing a sudden drop in their living standards won't just accept it quietly. They will likely strike and demand higher wages to compensate for the tax hike. If firms cave to the pressure and grant these higher wages, their own production costs increase. To maintain their profit margins, businesses push those extra costs onto the consumer by raising prices. Prices go up, so workers demand even more pay, and costs rise again. This destructive economic cycle is defined as the wage price spiral. Evaluating how unpredictable human reactions, like workers collectively bargaining for higher pay, can derail a government intervention is required for top-tier marks in policy questions. Before we finish, this warning board highlights the single most common fatal exam error, mixing up the tools of fiscal policy with monetary policy. If the question asks about fiscal measures, do not write about interest rates. The second major error is confusing a budget deficit with a current account deficit. A budget deficit has absolutely nothing to do with imports and exports. It strictly means that government spending is greater than its tax revenue for the year. Finally, remember that any 8-mark discuss question demands a balanced argument. You must explain both why a policy will work and exactly how it might fail to secure those evaluation marks. To support that journey further, connect with Fundoo Tutor for expert one-to-one guidance tailored to your child's learning needs.